Welcome back to Equity and Ag, your daily breakdown of the markets and the forces moving price action. Let's take a look at what's shaping the grain trade today. Corn futures finished slightly higher on Tuesday. May corn closed up 0.75 cents at $4.46. July futures gained 1.25 cents to close at $4.55. Once again, the market pulled back from overnight highs. The $4.50 level is clearly acting as resistance, likely tied to producer hedging at that price point. For now, corn feels stuck in the middle. On one side, higher energy prices are supportive. On the other, profit-taking in soybeans and wheat is limiting upside momentum. Technically, May corn continues to hold near its 100-day moving average around $4.4575. That level has acted as support, and Tuesday's session also produced a slightly higher low compared to Monday, a small but constructive sign. On the demand side, the latest grain crushings report showed corn usage for ethanol in January came in at 461 million bushels. That was down nearly 22 million bushels from December. The December figure was also revised lower by nearly 6 million bushels. Colder weather and higher natural gas prices likely slowed ethanol production. Year-to-date, corn usage for ethanol is now down about 0.5% compared to the same point last marketing year. That is notable because the U.S. Department of Agriculture is projecting a 3% increase in corn usage for ethanol this year. That means the summer months will be critical if that forecast is going to be met. The potential bright spot is that ethanol margins could improve if energy prices remain firm. Soybeans also closed higher on Tuesday. May soybeans gained 6.5 cents to settle at $11.70. July futures closed up 6.25 cents at $11.83. However, for the second straight session, prices finished well below overnight highs. The area above $11.70, which marks the previous November high, continues to attract selling from both traders and producers. Technically, support on the May contract sits just below $11.60, and that level held during Tuesday's session. On the demand side, there was supportive news. The latest fats and oils report showed U.S. soybean crush in January reached 227.8 million bushels, a record for the month. Additionally, early reports that U.S. and Chinese officials may meet in mid-March helped support the market. That potential meeting could set the stage for discussions between President Trump and President Xi later in the month, and any improvement in trade dialogue tends to underpin soybean prices. Wheat markets posted modest gains. May Kansas City wheat closed up 3.5 cents at $5.78. Minneapolis spring wheat futures were also higher, while Chicago futures continued to face some pressure. It was a mixed session overall, but wheat did find support as the U.S. dollar pulled back from early highs. Currency movement remains an important factor for wheat competitiveness on the global stage. For now, grain markets remain range-bound, balancing technical resistance levels with shifting demand signals and broader macro influences like energy prices and currency strength. Disclaimer: this content is for informational and educational purposes only, and does not constitute financial, investment, or trading advice. Trading futures and commodities involves substantial risk and is not suitable for every investor. You can lose more than your initial investment. Always conduct your own research and consult with a licensed financial professional before making any trading or investment decisions.